Good morning traders, welcome to your weekly fundamental analysis for the week commencing the 16th of February 2015. So this is a weekly video series where we're going to highlight in advance the key things to look out for each week and how the market may or may not react and also what the anticipation is and the expectations surrounding these releases. So do feel free to hit subscribe now. Alternatively, if you'd like these videos sent straight to your email box, absolutely free of charge, just go to fxnewstrader.co.uk and there's a quick email sign up form there and we'll have those alerts sent straight to you every single week. So, in terms of this week's analysis, there are 4 things I'm looking out for. So, they're surrounding the euro, the dollar, the pound, and then again the euro later on in the week. So let's have a look at what's going on and get stuck in. So today, Monday, the Greek are meeting with the European finance ministers to discuss what's happening with the bailout programme that's due to expire on Wednesday. Now, last week it was a key release or a key focus for us. The problem being not a lot happened from it. Now, with the deadline being Wednesday for the bailout programme, they're going to have to really come to some sort of agreement. So 2 things can happen here. Number 1, they'll come to an agreement in the short term. There may be a little bit of a positive sentiment surrounding this afterwards. We may see a slight strengthening on the euro. Number 2, if Greece and the European finance ministers can't come to some sort of agreement, then Greek stock will absolutely plummet. The knock-on effect from that, of course, we may see a further drop on what already is a very, very weak euro. That's the first thing. Okay, elsewhere, we have the FOMC coming out. So, interestingly, the FOMC, these are the minutes being released from the end of January. Now, at that time, there were some expectations for a slightly weaker NFP figure. It came out much higher than expected. So just bear in mind that employment, since the FOMC meeting took place, has come out much higher. Now, the thing we're looking out for with the FOMC this month really is hints as to what's happening with the rate hike, which is due out this year. Now, history, they did basically put in place a little bit of a pledge saying that a rate hike wasn't going to happen for a considerable amount of time. They removed that pledge with the last FOMC and just said that patience was going to be needed. So that was a fairly big thing for the markets and it's seen as a really bullish thing for the US dollar, which added to the strong NFP has been looking very strong as of late. So again, FOMC, we're looking for hints as to when we could expect a rate hike. If it turns out we're going to expect a rate hike sooner rather than later, then we're going to see some strength in the dollar. As it stands, expectations are that we're not going to see a rate hike this side of June. So if that changes, expect to see some moves in the dollar. Elsewhere, we've got some ECB minutes due out on Thursday. Now, the interesting thing about this and why it's so significant is that the voting schedule of members changed after Lithuania joined the euro. And this is the first ever ECB minutes release since then. So that's the first significance of this release. It's on Thursday. Second significance is that we may see some more light being shed on the Greece and the euro situation as well, following today's meeting, of course. So it's going to be quite a key release, and of course we could see the markets go either way as a result. Now, one key thing to listen out for is further reflection on the QE and any implications it's had on the market thus far and any longer term effects that they're expecting to see. So it's quite an important meeting. Now, there is one other thing I'm looking out for. It's one that not many other sources are really picking up on at the moment as one to watch, but a currency on my radar is the cable. That's the pound, of course. Now, again, a little bit more history in terms of what's been going on with this. So we had a real long-term decline after the Scottish independence. We were dropping very fast on a sustained period of time. Throughout that, we had votes for a rate hike were set at 7-2 for keeping rates on hold, but there were 2 members still voting for a rate hike. Then what happened is inflation dropped quicker than expected and lower than expected and previously forecast. And that then caused those 2 members to change their vote to keeping rates on hold. Now, what's happened since then over the weekend is Wheel has turned around and said that a rate hike may happen quicker than the market expects. And another one of the key members has actually turned around over the weekend and said that inflation might not be as slow as what we expect at the moment. So there have been hints there of some potential changes on heart when it comes to when we might see a rate hike and when we may see some interesting stuff happening in terms of inflation. So one thing I'm going to look out for is tomorrow's CPI reading. That'll give us a little bit of an indicator as to what's going on. I'm also going to be looking for further clarification or elaboration from the Bank of England members to see really what they're looking out for in terms of a rate hike or as to whether things are going to be on hold for a considerable amount of time. So that's your analysis for this week. As I said, you can hit subscribe now. We'll be uploading to the same channel every week from now. Alternatively, head over to fxnewstrader.co.uk where you can sign up for free to receive those alerts straight to your email box. And there is a nice little free video course there for you to have a look at as well. Okay guys, have a great week and I'll be back at the same time next Monday with your fundamental weekly analysis.